Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is October 9th, 2025, and we are diving deep into one of the most traded pairs in the world, the EURUSD. We'll start by breaking down the flurry of news events influencing the market sentiment and then transition to a thorough analysis of the charts. The current headlines paint a complex picture for the euro and the US dollar. A major factor weighing on the euro is the escalating political and fiscal crisis in France, which has pushed the EURUSD to its lowest levels since early September. The resignation of Prime Minister Lecornu and the threat of a sovereign credit downgrade have severely dampened investor confidence in euro-denominated assets. On the other side of the Atlantic, the United States is grappling with its own issues as the government shutdown enters its second week with no clear resolution in sight. Interestingly, this uncertainty has driven safe haven flows into the US dollar, strengthening it not because of domestic economic strength, but due to relative weakness elsewhere. The monetary policy divergence between the ECB and the Federal Reserve remains a central theme. The ECB appears cautious, with President Lagarde noting that the disinflation process is not yet complete. Meanwhile, the market is heavily pricing in a rate cut from the US Federal Reserve. Fueled by conflicting commentary from Fed officials and softer economic data like the recent ISM Services PMI dropping to the neutral 50.0 threshold. Fed Chair Jerome Powell added a layer of mystery in a recent speech by completely avoiding any discussion on monetary policy or the economic outlook. This leaves traders anxiously awaiting the upcoming FOMC meeting minutes and any further commentary from central bank officials for direction. Now, let's see how this dramatic fundamental backdrop is reflected in the price action on our charts. Looking at the full daily chart, we can see a very clear story unfolding over the past year. The pair experienced a powerful uptrend starting in early 2025, culminating in a peak just below 1.1920 in mid-September. However, since hitting that 2025 high, the trend has sharply reversed. We've seen a significant sell-off, with the price breaking down through several key levels. This long-term view establishes that the bulls have lost control and the market is now in a confirmed downtrend on the daily time frame. Now, let's zoom in on the most recent price action, specifically from the beginning of September until now. This view highlights the severity of the recent drop, which correlates perfectly with the news of French political turmoil that began intensifying. You can see the price was consolidating above 1.17 for much of September, creating what looked like a support shelf. However, in late September and early October, that support was decisively broken. We've had a series of strong bearish candles, including the last one for October 8th, which closed near its low at 1.1629. This shows intense selling pressure and confirms the bearish sentiment we've been reading about in the news. The prior support area between 1.1700 and 1.1730 has now become a formidable resistance zone. Switching over to the 1-hour chart gives us a more granular look at this recent downtrend. Here we can clearly see the breakdown that occurred. After failing to hold above 1.1770, the price cascaded lower over the past few days. The descent has been aggressive, with only minor bounces that were quickly sold off. This indicates that sellers are firmly in control in the short term. Any attempt to rally will likely face immediate resistance, first around the 1.1650 level, which was a minor support level that has since been broken. The more significant hurdle for any recovery is the 1.1700 psychological level, which now aligns with our major resistance zone. For an even closer look at the current battle, let's pull up the 15-minute chart for the last 24 hours of available data. This time frame shows the market trying to find its footing after the sharp drop. We can observe choppy, consolidative price action right around the 1.1630 area. The price action is tight, suggesting indecision as the market digests the recent move and awaits the next catalyst. Traders are likely watching for a break of this small range to signal the next short-term move. A break below the recent lows around 1.1597 would signal bearish continuation. Conversely, a move back above 1.1650 on this time frame could indicate a temporary squeeze or a relief rally. So, let's bring it all together and recap what we're seeing. The fundamental picture is overwhelmingly bearish for the euro due to political instability in France, while the US dollar is benefiting from safe haven flows despite its own domestic problems. This narrative is clearly confirmed by the technicals on the daily chart, which shows a strong downtrend in effect since mid-September. Let's outline the most important price levels to watch. Immediate support is the psychological 1.1600 level and the recent low of 1.1597. Below that, the next key target for bears is 1.1575, a level mentioned in several technical reports. On the upside, immediate resistance is found around 1.1650. However, the most critical resistance zone for any meaningful recovery is the area between 1.1700 and 1.1730, which represents the major support level that was recently broken. Now for some unbiased predictions based on the current data. The bearish scenario appears to have a higher probability, which I'd place around 65%. As long as the price remains below the 1.1650 resistance, the path of least resistance is downwards. A daily close below 1.1600 would strongly reinforce this outlook, making a test of 1.1575 highly likely. This scenario is supported by the strong bearish momentum and the negative fundamental news. The bullish scenario, which I'd assign a 35% probability, would require a significant shift in sentiment. For this to happen, price would need to reclaim the 1.1700 level with conviction. A sustained break above 1.1730 would be the first sign that the bears are losing their grip. This would likely need a catalyst, such as a surprise dovish turn from the ECB or a resolution to the US government shutdown that weakens the dollar's safe haven appeal. Looking ahead, the key things to watch are the upcoming FOMC minutes and any speeches from ECB officials. Furthermore, news regarding the US shutdown will be critical, especially if the deadlock persists beyond October 10th, as some reports suggest this could historically lead to EURUSD gains. Thank you for joining me on Explain the Charts for this detailed breakdown of EURUSD. Remember, this content is for informational purposes only and should not be considered financial advice. Always conduct your own research and analysis before making any investment decisions. Trade safe, and we'll see you in the next video.